right, let's get straight into the world of business. Local trade is in need of gains. That's after closing weaker on Tuesday with global markets as disappointing Chinese economic data weighed on global sentiment. Independent analyst Jimmy Moyaha joins us now for an analysis on the latest market developments. Jimmy, a very good morning to you. Thank you for your time. The local currency, as of yesterday, has fallen for the third day running to being 77% lower so far this month. Talk us through some of the factors driving those moves.
Morning, Paul. Morning to the viewers. I think the factors are largely going to be sentiment-driven across the board. So if you look at the performance of equity markets, U.S. markets, all finished in the red yesterday. All markets were in the red more than 1%, and that sort of followed through into this morning's Asia session as well, with Hong Kong, Sydney, as well as Tokyo, all more than 1% in the red as well. Our local side, we've seen that our top 40 has been under pressure. The all shares also been under pressure, and that pressure seems to be continuing. Early morning trade, we opened down on our all share and our top 40, and that's largely led by resources, with resources being down more than 1% in early trade as well. So if you look at the commodity side of it, that would be driving some of the resource counters. You've got platinum and palladium down by almost 1% and about 2/3% respectively, and that's going to put a lot more pressure around our PGM stocks and just the overall mining stocks that we have in the country. So on the equity side of it, we're seeing that those market movements and the macro factors that markets have been pricing in up to this point, you're starting to see markets are easing off quite a bit. In terms of economic data, alongside that Chinese economic data we got yesterday, early this morning we got data out of the UK saying that CPI came in higher than expected. The expected print there was around 6.8%. On the core CPI side of it, came in at about 6.9%. So still battling sticky inflation in the UK, which is never going to be a good thing for inflation targeting and inflation management across the world. We know that the US picture looks slightly different, and that's what's been giving markets a bit of reprieve and a bit of comfort. But you could see that as other economic data points from around the world, like the Chinese data, like the UK data, continue to come out, they might point towards a different picture in terms of what demand globally will look like and what global recoveries might look like, and that'll have pressures on emerging markets like South Africa.
Now, Santam published a trading statement for the 6 months ended 30th of June of this year. How have they fared in the period under review?
So they're expecting a strong performance. We're expecting headline earnings per share to be up anywhere between 135 and 155%, with earnings per share up between 130 and 150%. And a large part of that has to do with their improved underwriting results that they've managed to realize there, as well as the strengthening in their investment income that they've been able to receive there. They've also had the benefit or the windfall of having to reduce the provisions that they've made for COVID-19. So there were provisions that were raised in COVID-19 for claims, and some of those claims have not necessarily come to light. And so those provisions come back towards Santam from a business perspective. We know that we're going to get detailed numbers on the 31st of August from the group's perspective, but they did say that their capital position is stronger and it's still within their target range of anywhere between 145 and 165%. They did flag that there were one or two things that would have a negative impact on the numbers around an increase in adverse weather conditions, some increases in claims from their Turkish businesses and that sort of thing. But overall, we're expecting a very strong set of numbers from Santam when they do give us those numbers at the end of the month.
Yeah. KP's trading statements for the year ended 30 June of this year is also out. What do those numbers look like?
So CAP had, not necessarily a strong set of results, and we saw that reflected in the share price. Share price was down about 2.5% in a trade yesterday, but they're expecting that we will see a decrease of anywhere between 37 and 47% in headline earnings per share, and anywhere between 71 and 82% decrease in basic earnings per share. They too will be releasing their results at the end of the month, around the 30th, possibly 31st, and a lot of that has to do with the performance of their logistics business, or the logistics environment that they're operating in. They've had they've lost a big contract from a government perspective, from a retailer perspective, and that retail contract has resulted in impairments that have to be realized within their Unitrans business, and those impairments are going to be non-cash impairments, obviously, but they will have a significant impact on their earnings per share and headline earnings per share. But also, end of the month, we'll have to find out what else those numbers say.
Yeah. Rebosa's Property Fund providing shareholders with its monthly update and operational update. Anything worth noting in that space?
Not much to note. We know that Rebosa is in business rescue at the moment, and the current process is almost finalized. What was mentioned in the announcement was that there was a due date yesterday, or around the 14th, that was missed, that needed to be finalized in terms of the finalization of the selection of final purchasers for the assets that they are selling off. So if you remember, they went through a bidding process, they went through an expression of interest process, a bidding process, due diligence process, they've shortlisted prospective buyers and that sort of thing, and now they're in the finalization process on two portfolios, their Nedbank property portfolio as well as their Standard Bank property portfolio, and on both cases, the Rebosa's business rescue practitioners and the joint business rescue practitioners are currently finalizing the final bids or the final offers to purchase and finalizing those agreements. And so they've just asked for extensions to get that over the line. The extensions have been approved. So on the Nedbank side, it's just a 7-day extension to the 21st from the 14th. And then on the Standard Bank and Investec property side portfolio there, that's now being extended to the 28th. Not much else has been outlined there. They did briefly mention around the fact that all of these sales, they're still trying to ensure that Rebosa's employees and Rebosa's support functions are kept on as part of the sales and ensure that jobs are secured in that respect wherever possible. But they didn't give too much more detail around that.
Very well. Thank you so much. Let's leave it there for now. A wrap-up of some of the major stories in the world of business. Jimmy Moyaha, independent analyst, summing that up for us.